Hello, and welcome to new week and another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top events of the week, what is expected to be moving the markets. We'll be taking a key focus on this week's non-farm payrolls. It's one of a kind. We all know that non-farm payrolls come on the first Friday of the week of the month, sorry. But for this specific month, we'll be seeing the non-farm payrolls come on Thursday for the first time. We haven't seen these in a long time. So good morning, everyone. You can see Paul Carey is already in the house. Shout out to you and thank you for being the first to join and comment. Good morning, Robert Cavale, Andrew, I can see John Shege, Tony, Joshua and Joash. Muni, thank you and good morning. So let's get started with the economic calendar right up. So from the economic calendar, you can see that it has been quite a busy morning with quite a good number of economic reports, with the main report being from China, that is manufacturing PMI, which came in at 49.7, slightly higher than the expected 49.6. Non-manufacturing PMI at 50.5, a big improvement from the previous reading of 50.3. Then we had housing starts in Japan dropping even further, meaning that there is less and less Japanese people starting construction. In this case, a drop of negative 34.4%, further drop from the prior reading of negative 26.6%. So German import prices dropped by 0.7%. Whereas retail sales also dropped by 1.6%. Current account worsened by to 23.5 billion. On the other hand, our final GDP quarter over quarter for the UK at 0.7%. And then we had the revised business investment quarter over quarter at 3.9%, which was a big drop from the prior reading of 5.9%. So going on for the rest of the day, I will be expecting quite a number of reports ranging from the German preliminary CPI data. Then we'll be looking at the KOF economic barometer from Switzerland. And all these reports are not high impact news, so medium to low impact as we head for the rest of the day. So key highlights will be speeches from FOMC member Bostic and Goolsbee at 5 and 8 p.m. And then ECB President Lagarde will be speaking at 10 p.m. So fast forward for the week, on Tuesday, we'll be having inflation data from the Eurozone, where we look at the core CPI flash estimate, whereas the CPI flash estimate at 12 p.m. on Tuesday. Then we get a range of speeches from central bankers. So one will be having a speech from ECB President Lagarde at 4:30 p.m. on Tuesday. So at the same time, Bank of England Governor Bailey will be speaking, Bank of Japan Governor Kazuo Ueda, and of course the Fed Chair Jerome Powell at 4:30 p.m. on Tuesday. Clearly, it will be a very busy session with 4 different central bank governors speaking at the same time. So at 5 p.m., we look at the ISM manufacturing PMI from the US as well as the job openings. This is expected to share more insights on the manufacturing conditions in the US economy. And of course, the number of job advertisements is a key tracker of the health of the US job market. So later on, we'll be looking at retail sales from Australia on Wednesday at 4:30 a.m. Then the private sector ADP non-farm employment change at 3:15 p.m. on Wednesday, before we look at the crude oil inventories at 5:30 p.m. So Thursday, which will be the main day where we expect most volatility, we'll be expecting inflation report from Switzerland at 9:30 a.m. Then later on in the evening, or in the afternoon, we get the US non-farm payrolls. So the non-farm payrolls are expected at 120K, meaning that we're expecting that the US economy created 120,000 jobs in the month of May, and this is a drop from the prior reading of 139K jobs. So unemployment rate is expected to slightly tick higher from 4.2% to 4.3%, whereas the average earnings are expected to have increased by 0.3% in the previous month. So of course, we know that a strong jobs report is expected to be positive for the US dollar, whereas it's supposed to be negative. On the other hand, a weakening job market would trigger the Fed to hold rates higher. In that case, it would be positive for the dollar. So in this case, we are looking at Jerome Powell's dual mandate. On one side, he needs to keep prices stable, and that's why interest rates have remained high as he's currently tightening policy. But on the other hand, he's expected to promote or push for full employment in the US economy. So if unemployment is rising, then that would cause Jerome Powell to cut rates. So, of course, we all know that anything looking at cutting rates would further weaken the dollar. We know the dollar has been pretty weak over the last couple of weeks. So that is how we'll be interpreting the report on Thursday. So we'll also be looking at the ISM Services PMI at 5 p.m. on Thursday. Before we get to Friday, on Friday we expect very slow activity in the markets, mainly because Americans will be celebrating the 4th of July, or rather the Independence Day. So usually the markets will be closed, but of course forex markets will be open, though we expect low volumes. So on Saturday, after the market closes, we'll be looking at a speech from Bank of England Governor Bailey. So other than that, looking at other updates in the markets, we know that as of this morning, we have had quite some good volatility. The dollar is still pretty weak, and the yen as well as the New Zealand dollar have been making some gains, the yen being the biggest mover, gaining 0.37%, whereas the New Zealand dollar has gained by 0.23%. So on the other hand, the weakest currency as of this morning is the pound, which is down 0.1% against the US dollar. So in the prior month, looking at the overall performance, the dollar and the yen have been the weakest currencies, whereas the euro, the Swiss franc, and the pound have made significant gains, with the euro being the strongest, up 3.32%, Swiss franc 2.89%, GBP 1.9%, New Zealand dollar 1.75%, and Australian dollar gained by 1.6%. So year to date, we know there has been quite a big movement, with Bitcoin making the biggest gains, up 15.32%. On the other hand, other notable movements include the 13.21% gain in euro against the dollar. So also the 11.98%, this is the weakening of the dollar to the Swiss franc, and of course the New Zealand dollar, which has gained by 8.46% against the US dollar. So looking at the other key highlights as of this morning, this is from Financial Juice. Spanish current account balance 1.355 billion, and this is a weakening from the previous 1.42 billion. So on the geopolitical front, Iran Foreign Ministry spokesperson, security of UN nuclear watchdog inspectors cannot be guaranteed days after attacks on nuclear sites. So far we have had quite, I would say, volatile market as a result of the Israel-Iran events. But then since last week, we have seen things calm down, a ceasefire executed, and the market is now erasing the premium on this potential getting worse. Apologies for that. I lost my connection for a second, but now I'm back. So as I mentioned on the key highlights as of this morning from trading economics, I believe we had already covered German retail sales unexpectedly falling. And by the time I had the disconnection, I was talking about Brent oil falling. So Brent falls on easing tensions and prospect of more OPEC plus oil production. So Brent crude oil futures dropped to $66.6 per barrel on Monday after its sharpest weekly decline in over 2 years amid easing tensions in the Middle East. So kindly update me if I may have skipped something by the time I got disconnected. Awesome. So as we proceed, remember, if you have any questions arising from the presentation, feel free to type them in the comment section and I'll be responding as we progress. You can see there was an update, and thank you, Andrew, for the comment here. So we move on regardless. So from the Yahoo Finance website, Trump tax bill hit Senate with a GOP torn by competing demands. Of course, this will be a high-profile week with the Senate discussing the big, beautiful bill by Trump. So in this case, of course, there will be negotiations, but once the bill passes, then that means increased spending in the U.S. economy, which will likely boost stocks, as we have seen. The Nasdaq and the SP 500 have already hit new all-time highs today, with the Dow lagging, but still on course to potentially get into a new all-time high later this week. So European markets are becoming increasingly difficult to ignore. Of course, they have been bullish as per the last 2 weeks. So we'll be looking at that too as we cover technical analysis on this session. So Chinese economy shows surprising signs of strength. So that too will be checking on Chinese equity indices. And other than that, I don't see any other key highlights worth delving into. So Canada rescinds digital services tax to advance stalled US trade talks. So remember the tariffs from Trump that were frozen bound to expire by the 9th of July. So right now we just have 9 days. So on the other hand, UK economy grew at the fastest pace in a year in Q1, Statistics Office says. So that was a big growth of 0.7% given the consistent weakness we have seen over the times. So those are the key highlights as of this morning. So that being said, I believe now we can delve into something else. In this case, some technical analysis, try to understand the prevailing chart patterns. And once we cover this, hopefully everyone will trade from an informed perspective. So as always, remember, this session does not constitute any investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So we're looking at the oil price, and what we saw with Brent oil was a very strong rally on the verge of the Israel-Iran attacks. And here we had a 19% gain. But then immediately the week opened last week, there was a sharp drop in oil prices, with oil prices settling at a low of $66.1 per barrel. So for the better part of last week, after the sharp drop on Monday, Tuesday, Wednesday, Thursday, Friday were more of a sideways momentum. And you can track these using a simple triangle, and you can see it was more of a sideways momentum. So now what we are witnessing or experiencing in the market right now is a potential break playing out here. And if confirmed, then we could have a case for some good rally in oil prices. So that hasn't played out yet. So we'll be observing towards the top of the hour to see if there's any chance of progression higher. So for now, it's an attempted break. And once the break is confirmed, then we should be looking for some further upside momentum. So Chart of the day today is gold. We have had 7 hours of greatness, strong bullish momentum. So you can see after the first hour of the market dropping, we saw the market settling around here. And now from there, all we have been seeing is strong bullish momentum. So clearly, very strong momentum here is likely to extend for the rest of the day as we see gold prices recovering. So from the daily time frame, we had a very strong bearish momentum, but now we are seeing the bulls coming right back. So also looking at this, you also notice the lowest price of the day, where the market dropped towards the market open. There was a sharp drop, and immediately the market recovered in what looked like some form of liquidity grab before the market proceeded higher. So there's a good chance that we extend the rally to around 3,300. So there's still more upside potential, and if we happen to break the 300 price action level, then we should be heading to at least the Friday's open. So Friday's open is all the way up at around 33.27. So we expect at least to see gold prices recovering this week. So on equity side, while we are celebrating 7 hours of greatness in gold, here we are looking at consecutive days. In this case, we are looking at 6 consecutive days of bullish momentum that led into a new all-time high. So the Nasdaq has never been this high before. So as we trade the Nasdaq today, then we should know that there are no candlesticks on the left. So here, the strong bullish momentum continues. And of course, whenever you have such a strong bullish momentum, you never really want to buy the top. So you are always patiently waiting for some pullback. And whenever there's a pullback, it gives you a much better entry. So for instance, in the evening on Friday, after the sharp drop, you can see how it was a great entry after the market started reversing. And we should be looking for similar opportunities this week. So here, we had a nice pullback here, and then the market rebounded strongly and created a new high. So if we could have something like that, that would be awesome for the week. So we'll be closely tracking to see the progression. So it's a very strong bullish momentum also for the SP 500. If you look at the daily chart, it's a new all-time high that was broken on Friday, and now on Monday we're extending the rally. So clearly, we should be waiting for even more pullbacks. This is something we had covered on Thursday, targeting this all-time high. Then on Friday we broke, and today we push even higher. So for the US 30 or the Dow Jones, here we are basically looking at a very strong momentum with the market looking to reach a new all-time high. Of course, this move is expected to extend this way, at least for the progression of the week. So Bitcoin back in this sideways momentum range. So after a sharp drop last week that saw the market dropping to below 100K for a while, we have seen strong bullish momentum, but upon hitting this resistance around 108,924, we are seeing some form of rejection, and price seems to be pushing back downwards. Of course, we don't expect much of a big sell-off, so perhaps maybe the market will be looking to bounce from around 106K. So the dollar index was pretty weak as per last week, but then looking at the price action from Thursday through to Friday, it screams more of a sideways momentum. I would say this is not a market that has been continuing to move lower. Here, the dollar seems to be holding with a low of around 96.59 or 57, and a high of around, I would say, 97.008. So here I reduce the rectangle to around this area for a much better estimate. So more of a sideways momentum on the dollar, and whenever we see this after a big drop, then it's a sign that the dollar is holding on, and we could be seeing the dollar rebounding later in the week. So while this has been happening, major currencies have been gaining against the dollar. If you look at the euro, this is a pretty strong momentum on the daily. And of course, if you look at the last couple of days, here we are looking at 7 consecutive days where the euro was just gaining against the dollar. And now we expect the opposite to be happening. So the euro seems to have entered some form of consolidation, or more or less like a sideways momentum. in this case indicating that the momentum is losing its energy. So while we were getting higher highs day after day, if you look at the last 3 days, the high on Thursday, high on Friday, and the high today, seems like the market is currently unable to push newer highs. So this leads to the expectation that the market might be about to change direction. And in this case, we observe this area here where the market could be ranging for a while, and then a break below 1.1684 would now likely lead to the assumption that the trend has changed and now we are moving further back down. So it's the same thing for the pound. We got into a frag. As of this morning, we've just bounced from this upper trend line and now we are headed to the lower one. So still more room for downside momentum, with targets being on the lower trend line around 1.3676. So AUD/USD also had this strong momentum, forming higher highs. But then now we are seeing a rejection of higher prices with an attempt to move higher this morning, met with a bearish entry. You can see the strong bears entering the market from the two red candlesticks here, which indicates that we have already formed the high of the day. So good chance that we see the market progressing to the low that we saw on Friday. So still chances that the dollar may regain some strength. So on USD JPY, we had projected that the market would bounce at 143.606. That didn't play out. The market got close, but not the exact price action level. And then this morning, we dropped or dipped to the same area. And what we are seeing here is basically the market bouncing from the same area, which indicates that the dollar may be regaining some strength. So in this case, we should be looking at potentially the high of day. So the high of day is the high that we got in the first 4 hours of the morning. And in this case, potentially the market getting back to that area. So as for Brent oil, we've already discussed this, that once the breakout is confirmed, then we should be looking at much higher prices. And of course, last day's high might be a nice target, around $67.9 per barrel. And we continue watching that market. So on US equity side, we've already covered this. So more bullish momentum is expected. So we wait. Japan stock market has been on a very strong bullish momentum, but then upon hitting this major resistance area, we are seeing a very strong pullback playing out as of this morning. So from the 4-hour chart, you can already see the market pulling back. From the 1-hour chart, also some nice pulling back, which implies that we could be retesting or erasing Friday's gains. So Friday's gains played out really nice. And now you can see where the market had opened on Friday. So we could be seeing the market extending this pullback all the way down. So this is from a daily perspective. So it's basically expecting this candle to drop all the way to the open on Friday. And that would confirm a reversal. So we don't have that yet. But if it plays out, then we should be more bearish on the index. So for the UK stock market index, there was a strong momentum last week. Notice how we ended the week pushing for a new high. But then as we get into a new week, notice how the market has attempted to move higher. And then it got a very strong rejection here with hot looks like a shooting star candlestick, indicating a rejection of higher prices. So perhaps you should be expecting to see the market extend further back downwards. And this seems to be a theme among European equity indices. If you look at the German stock market index, the DAX, here you can see an attempt to move higher this morning was met with more bears entering the market, and now we're in the negative territory, which indicates that the markets could be giving back some of the gains we had last week. It's normal. We expect some profit taking after such a strong move. So we could be seeing the market going back to retest previous highs, and this is somewhere around the price action we saw on Friday. So you look at the Spanish stock market index, the IBEX, also erasing some of the Friday's gains. The French stock market index also erasing some of the gains that we had seen on Friday. So the Swiss stock market index, we had projected a very strong rally last week. So it didn't quite complete the journey to the target we had identified. when now we are seeing the market reversing, but still within the range of Friday's price action, which implies that on the short run, we should be expecting the market to retest 11,952 price action level. So the Netherlands stock market index also crossed the gap as of this morning. Seems to be bouncing on quite well, quite an exemption from the European indices. Also, the Norway 25 stock market index opened with a gap, and now we are seeing the potential for the market going for last week Friday's gap, and it's a gap that wasn't crossed. So now potentially the market could be covering this gap this week. So as of this morning, we have seen the Euro Stocks cash index make an attempt to move higher and then immediately reverse. So here we are seeing the market erasing early morning gains and getting to erase some of last week Friday's gains. So in this case, it's a very strong entry by bears, which likely implies that we could be headed much lower for the day. So on the Chinese side, if you look at the Hang Seng Index, of course, it has been erasing some of the last week's gains. So if you go to a smaller time frame, then you would notice that there is some form of pattern here, which implies that the market is trading in a flag. In this case, we know that it's temporary before we get the next directional momentum. So for now, we're getting some support here, but then we wait for the break. We keep tracking that flag. So lastly, looking at the China 50 cash index. So on the daily, there was a very strong attempt to break this particular trend line, which failed. And now we are seeing the market reversing some of the strong momentum we had seen previously. So that's the Friday price action was pretty strong and bearish. And now as we get into a new week, we are seeing some more of sideways momentum on the Chinese stock market index. So that's it for the day. Thank you very much, everyone. Also remember that we have a new episode of the Bullish Banter podcast. So make sure to check it out on the FX Pesa YouTube channel, and of course on all other podcast platforms. On top of that, if you're just a beginner and you're just starting your trading journey, check out the Novice to Pro course by Rufus Kamau. That's my name. You should check it on YouTube, and this will help you learn from the introduction to trading, charting skills, tradable assets, how to understand your candlesticks, market structures, trading strategies. You also learn risk management, understanding market news, building a trading system, and eventually trading like a pro. So if you don't have an account, make sure to check the links in the description below, register for a trading account, and then begin your trading journey. So that's it for the day. And now I'm checking on the comment section. Good question here. Reason as to why gold is going up. What's the difference between Germany 30 and Germany 40 respectively? So the German DAX 30 is the standard benchmark index for the German stock market. So earlier this year, they adjusted the rules, and now it has 40 companies. So it's the same index that was changed from German 30 to now German 40, or what we call the DAX. So now it tracks 40 companies instead of 30, and that's an even healthier index. So thank you for asking. We have already covered gold. I'm seeing comments on gold here. So we did the analysis on BTC. Why at this point is China creating an offshore gold vault? What insights can we pick on this strategic move on future gold prices and yuan currency? So what we have seen is China buying even more gold for, I believe, the 7th consecutive month. So on the question of gold, the thing is, gold had made some big gains as a result of safe haven status, with a lot of investors rushing to gold on the break of the geopolitical news between Israel and Iran. So when a peace deal was agreed, what we saw was the exact opposite. In this case, gold erasing some of those gains. So gold was basically trading as a premium, as a result of the expectation that the geopolitics would likely extend further. However, with de-escalation, what we saw is in the last 2 weeks, gold erasing all of those gains. But then don't forget our good friend, the trend. So the trend in gold for the better part of the year has been a very strong bullish momentum. So while we erased some of the gains we had seen during the tensions between Iran and Israel, now we are seeing gold resuming its normal trend after getting back to the previous support. Notice this area here. So here now we are seeing gold resuming its trend, and of course, clearly we are seeing a very strong momentum as of this morning. So I expect the momentum to continue at least for the week as gold makes some recovery here. So another good question, how important are these correlations considering what is happening on gold and DXY? Of course, gold would find it easier to recover when the dollar is weak, but then the correlations have been broken for a while. So we haven't been observing any strong correlation between the DXY and gold. In most cases, we have seen them moving positively together, while in traditional sense, we have mostly seen gold and dollar moving in opposite directions. So usually, when the dollar is weak, we tend to see gold as strong, and when the dollar is strong, we tend to see the dollar as weak. But then, of recent weeks, we have seen them moving together. For instance, last week, the dollar index was really weak and moving further downwards, and at the same time, gold was also weak, moving further downwards. So the correlations have been broken for a while. So that's it for the day. I don't know if I missed any other question. Enjoy the rest of your week, and I wish you have a profitable week. So if you have enjoyed the session so far, make sure to like and subscribe to the channel. And if you're watching this on X, a like and a retweet would really help us to get to more traders. Thank you.